Today's top three things, however, in my notebook. Number one, we'll go with euro. Actually, number two, we'll go with all of Asia. And then number three, I'll go with the 10-year bond yield, specifically the 10-year bond yield here in the U.S. The top thing is obviously this euro call. So again, short the euro. It's a pretty straightforward call. We don't want to mince any words. We don't want to ask the sell side for their opinion. It was kind of interesting because Goldman Sachs came out literally on the year-to-date lows of the euro and said, hey, look, we think the euro can go to 80. They used the 2017 call in terms of the duration of that call. But again, that really spoke to the capitulation on the downside that was the euro. Now you get the counter trend bounce, again, to 110. And the risk range is actually 103 to 110. So what I look for when I see a widening risk range is more foreign currency market volatility. So again, a widening range leads to higher variance in mathematical terms, and that would also lead to higher volatility. So again, this is a great market to trade from a currency market perspective. You have to be there on these up moves for the euro on the short side. Again, the shorts have been squeezed right to the top end of the risk range. As I pointed out, no support to 103. The second point that I'd make this morning is Asia. Now, not surprisingly, this has nothing to do with what the mainstream's running with this morning, but there was Asian economic data overnight, and as far as I can tell, Darius, Asia does not cease to exist at this current juncture. However, it does still calculate in global GDP. So not only was the German PMI better, and everyone's talking about that because everyone's long Germany, and by the way, they should be, but what you saw was the Japanese PMI slow, the Chinese PMI slow, and Chinese stocks hit all-time highs on that. So again, the core bull case for Chinese stocks is that the economy is slowing at a faster rate. That, of course, sounds perverse, but it is the truth because people are expecting more stimulus to solve for the Chinese problems. But again, the Chinese are going to have a tough time solving for economic gravity if they continue to print a PMI number with a 49 in front of it. That's the first four handle in front of it. And by the way, the Chinese make up the numbers, so they must be really bad if they're reporting a 49 versus the low 50s, which they'd been reporting in PMI terms for the last couple months. Finally, what I'd say in the top three things is the 10-year bond yield. The easiest way to play all this, global deflation and global growth slowing. And again, global is the key word in that sentence. Again, global growth slowing or phrase is that the global growth estimates are falling. Again, we're not in this 4 to 5% global GDP environment anymore. We'd be lucky to have 2 to 3. And again, that's we because the U.S. is still currently tracking with the 2 in front of it. So again, that's the point. Lower bond yields equal lower growth rates for longer and lower inflation expectations. So when you see this morning's CPI print in the U.S., and this really does matter because in February what happened actually in the core of how you calculate the CPI is that the stuff bounced. So even with the bounce, the CPI was flat. So you can look forward to the next deflation data point will be a sequential slowdown. And again, today's was a February report for CPI. You're going to get the March data point next month. And after that, the Fed's going to go, oh my God, we have more deflation. CPI will slow sequentially, not only against an easy sequential compare, but a tougher year-over-year compare. So again, stuff to think about there. Again, global deflation, global growth slowing. You'd be longer of bonds, long bonds, because you think the 10-year bond yields can go lower. 1.85% is immediate-term trade support for the 10-year bond yield in the U.S. Intermediate-term support down to 1.69, 1.69%. And I am sure that the long bond bulls will be quite happy with a strike price down there. And those are your top three things.